Even if you don't understand much of macroeconomics, finance, money management, you would still be able to put your finger on the fact that there is something wrong in the economy right now. Take a look at debt, for example. It is hitting an all-time high. Government bailouts have been at an all-time high. Similarly, the extent of money printing has been at an all-time high. So again, you don't need to be a genius to simply put two and two together and ascertain the fact that there is something wrong in the economy. When you aggregate this with the fact that in 2020 COVID crisis happened, and after the crash, stocks suddenly bounced back and grew by more than 150%. Again, you don't need to be a macroeconomic genius to figure out that there is something off in the economy. Now, this viewpoint has been expressed by a US politician in a very crisp manner.
A currency or destroy a currency, the middle class gets wiped out. So the people who get to use the money first, which is created by the Federal Reserve System, benefit. So the money gravitates to the banks and to Wall Street. So that's why you have more billionaires than ever before.
So there are three specific points that I would like to discuss with you through this video. Number one, I will help you understand why a recession is really good for the economy right now. Number two, I will give you some historic perspective of the recession as to what were some of the fundamental changes that were made into the economy, finance due to past recessions, and how would the current impending recession that everyone is speaking about would change the world going forward. Third and finally, I am going to explain you my game plan of making money through this recession. So let us get the discussion started. Also, a very quick shout out to our sponsors for today, which is Kuku FM. It is an excellent audio learning platform where you can listen to knowledge related shows and books. I am listening to the summary of Ray Dalio's book, which is Changing World Order. It can help you understand more about macroeconomics, finance, and how the current world structure is getting disrupted and what macroeconomic impact it will have. So you can check the links in the description box. There is a 50% discount code that you can avail by checking the links. So let us get the discussion started, and let's first and foremost understand why recession is good for economy. Now there are two ways in which you can understand recession. So one is the classic definition of recession, that recession is a period of economic slowdown. For example, if you consider the case of 1930, it was considered a period of Great Depression. So 1930s period was called as Great Depression. Why? Because during that period or during that decade, the economic activity stalled. The GDP of the world did not grow by much. So that was a period when there was very less economic activity, and it was a period of degrowth, not growth. So this is a classic definition that you would have often heard, that recession means that the world growth is slowing down, and we end up believing it to be an evil thing. But a recession can also be understood through a second definition, that it could be considered as a period where fit firms end up surviving. So this plays out from a Darwinism theory, and you might have often heard of the fact that, okay, Darwin said that the survival of the fittest. So recession becomes a period where only fit firms end up surviving, and the money flows to people who have the best use of that capital. This is a very, very important point. So let me help you put that in perspective by talking about two phases of the economy, which is usually referred to as boom and burst period of an economy. Now, usually our economy goes through these type of cycles, that there are periods when the economy is growing, and this is called as the boom phase. And this is called as the shrinkage or the burst phase of the economy. Now, from a consumer point of view and business point of view, there is something completely different that happens across both of these phases. So during a boom phase, what ends up happening is that there is large availability of capital, money, or credit in the economy. A classic case in point is 2020, that after the 2020 COVID crisis, excess amount of money was printed into the economy, and that money was flowing through the economy. In fact, this trend started way back in 2008. That is when the quantitative easing had started at scale, and a lot of money has been printed into our economies after 2008. So this signified the growth phase of the economy, and what this leads to is people clamoring for more and more growth. Every country ends up competing with each other and is trying to outcompete each other in terms of accelerating growth, even if that growth is artificial growth. Now, what do I mean by artificial growth? A classic case in point is one of the companies in India that was valued at $3 billion just 1 year ago, and right now its valuation has been lost by 99.7%. Let me know which company am I speaking about. I would love to read your comments. So the point is that since everyone is cheering for this growth, it leads to a lot of inefficiency in the economy. Now, what do I mean by inefficiency? It simply means that the money flows to companies that are not necessarily creating good businesses and are working on good ideas. They are just getting more and more funding simply because of the fact that everyone is cheering on for growth. So this is the classic trait of a growth phase, and at some point in time, as we say in Hindi, कि पाप का घड़ा भर जाना, And when paap ka ghada bhar jata hai, then Shaktiman comes. No, I'm just kidding. So the bottom line being that during this boom phase, a lot of inefficient companies end up getting a lot of capital, and that is not good for the economy. So therefore, this burst period, which is also called as recession, is very, very important for the economy because it streamlines the flow of the capital and it ensures that capital is reaching the hand of a person or a company that has the most productive use for it. This is the first reason why we need to have recessions from time to time. Now, the second key reason why we need a recession from time to time is that it eliminates bad practices from the economy. So let me outline this point by giving you two relevant examples of past recession. So the first one comes from 1930 itself. This was the period of Great Depression, and there was a systemic inefficiency in the economy during that time. So if you go study about the Great Recession, what you will figure out is that the world moved towards a recession for a range of reasons. But one of the primary reasons being that people were losing a lot of jobs. And as you can see that within a few months, the unemployment rate shot up from 0% to roughly 26%. And as a result of that, people stopped spending money. Now think about it. And this is very, very logical in a way that when people are losing jobs, of course, they are not going to spend money like crazy. They are going to save money because they will look around. They will see that, hey, you know what? My neighbors are losing jobs. My friends are losing jobs. Tomorrow, even I might lose job. Therefore, I should save all my money and I should not spend it. So this is logical thought process, no doubt about that. But what this problem led to was that if everyone in the economy starts thinking in the same way that we will only save and not spend, then it leads to a problem called as underspending the economy. So this leads to a vicious circle, so to say, that there is unemployment to begin with, and which leads to underspending. And because people are not spending, therefore companies will have no incentive to produce more ACs, fridge, TVs. Back in 1930s, probably factory related goods. So if companies are underproducing, then they will cut workforce more. So this becomes like a vicious circle, and someone externally needs to jolt the economy or give current to the economy in order for this cycle to break. And that external current was fiat money, or government's ability to print more money and throw it in this system so that the spending cycle can improve, people spend more. This leads to more incentive for companies to produce more, and as a result, they hire more, and the entire problem goes away. So you would have seen that after 1930, a lot of countries started moving from gold standard to fiat standard. Before 1930, we used to have gold standard, so to say. But after 1930 period, a lot of countries across the world, they started adopting the fiat standard at scale. Fiat standard simply means that the government took onus on itself to print as much currency as they like. Now, I am not supporting this move. I am not debating this move. I am simply trying to tell you that there was a fundamental shift that happened post 1930. In case you want, I'll make an entire financial perspective of World War I, how it changed the current financial systems. Let me know in the comment box. It's a fascinating topic. I'm reading about it, so I would love to make that video in case some of you want to know my viewpoint. But I hope that through this short discussion, you get a sense that there was something fundamentally off that was happening in 1930s, and we needed to change the system more towards fiat money. And that change happened. Why? That happened because of something called as Great Depression, which is an exaggerated form of recession. So therefore, we need recessions from time to time. Again, in 2008, something fundamental shift. So what was the 2008 crisis about? It was called as the subprime lending mortgage crisis. In simple words, it meant that banks across the US started selling products that they should not have sold. That these were really bad products. These were called as mortgage-backed securities. These were horrible products to be sold to customers. They ended up selling these products at scale, which led to crisis. So in 2008, what change was brought into the economy, or rather what systematic change or systemic change was brought into the economy? It was the oversight on investment banks. So you would have seen that a lot of banks in the US, they got merged. For many of them, higher levels of scrutiny was involved. Why did, again, such a change happen in the economy? Because the 2008 crisis led to a recession. Why did it lead to a recession? Because banks did not act responsibly, and as a result, that recession presented an opportunity to the world to restructure the banking system. Is it perfect now? The answer is far from it. It is still very, very murky. There are 100,000 different problems, but the bottom line is that at least things improved. So to cut the long story short, recession is an opportunity to bring structural change into the economy. So this brings us to the second part of the video, where I will explain that what structural changes will happen after the next round of recession, because it is almost given that we are in recession now. In fact, a few weeks back, I had made a video where I categorically pointed out to the fact that we are in a recession now. So you can go and check it out. But on this part, let us speak about the upcoming recession and what would be the repercussions of it. So the current recession, which is somewhat starting from this year and it might last up until 2024, while no one can predict till when it will last, we can all give our approximation, but the general consensus right now seems to be that we are going to stay in recession from 2023 to 2024. So you need to ask yourself why this recession is starting. It is starting because of the fact that there has been excess money printing. In fact, this is money printing on steroids. Such levels of money printing at scale has not existed in the US history so far. And this is the first time that such a scenario is playing out, and it is leading to something called as unstable inflation. Now, what is unstable inflation? To get an understanding, take a look at this particular chart. So what you would notice is that this is the general level of inflation that stays in the developed economy. So I'm taking a look at the Euro area. So this is a developed part of the world. I'm not talking about some random country here or random nation or random region here. I'm talking about one of the foremost economic regions of the world. So this is what the normal level of inflation usually stays. And now the inflation has shot up here as of now. And these are very, very high levels of inflation. And going forward, what is going to happen is that some months we are going to have 10% inflation. Some months we might bring it down to 4% inflation. Then some months we might have 12% inflation. Such wide range of inflation is called as unstable inflation. This type of scenario has not existed in the past. Now you would obviously ask me that, okay, what is going to be the implication of it? The implication is fairly simple, and for this you need to understand the concept of certainty. So first and foremost, you might have heard very often in the stock market that stock market loves certainty. Even if an event is bad, for example, there was COVID crisis. Once it was figured out that, you know what, COVID crisis, wave 1 is not going to create massive impact. Then the market started recovering. Then wave 2 happened, wave 3 happened. The markets did not fall massively by wave 2 and wave 3. Why was that? Because market had understood the concept of COVID, that it is not going to destroy the economy. If wave 1 could not do that, then wave 2 and 3 will also be okay, so to say. So markets and businesses prefer certainty. It could be negative certainty, it could be positive certainty. Of course, they will prefer positive certainty, but even negative certainty is okay. Same goes for inflation, that if the inflation is very high, then businesses will take loans accordingly. Businesses will prepare for structures and processes accordingly. Similarly, if the inflation is very low, then again they will maneuver their practices, operational practices, hiring decisions, etc., accordingly. But in a situation where there is unstable levels of inflation, businesses cannot prepare for this type of uncertainty, and a lot of companies will go out of business. So the chain of logic is fairly simple, that there is unstable inflation. This will lead to a lot of firms getting wiped out because they will not be able to handle this uncertainty. And as a result, we will exhibit slow growth for the next 1 to 2 years. Now, what is so different about this recession compared to other set of recessions that we have had recently? It is the political mandate. Now, what do I mean by that? Basically, when you look at politicians, their goal is simple. They want to win elections, and there are two tools that they use for it. So first, they depict the idea that, you know what, under our leadership, a country has grown a lot. There is a lot of growth that has happened. Now, what is meant by growth? These are GDP numbers, these are growth numbers, etc. And what are you looking at? You are looking at growth in conventional terms, that share market is growing, economy is growing, etc. Now, unfortunately, this is not happening too much. Second key mandate for a politician is what? To keep the prices down. Again, this is the same onion story that played out in 2010. I had spoken about it on one of my earlier videos, so you can go and check it here. But to cut the long story short, people hate it when they are made to pay more and more money for everyday goods. So controlling prices is becoming more and more important, even more than accelerating growth. So therefore, the argument that we are going to have a period of recession for 1 or 2 years, it looks very valid at this stage. Now at this stage, if you are still joined with this video and you're still watching it, so I want to reward you for watching this video by talking about the investment plan. Now think about this. So people who would have dropped off just by listening to first half of the video, they are getting scared and they would have seen the headline of the video that, okay, recession is there, this, that, and Akshat is speaking negative and so many people are speaking negative. Let us withdraw all our money out of the stock market. Those people are not going to make any money not only in this recession, but in any recession. Because if you can't even take 15-20 minutes of your time out before making investments, then you should not be investing directly in any asset, so to say. Give your money to mutual fund managers, it will be much better. But yes, I want to reward you, and for this, I'm going to speak about a few salient points. First and foremost, the markets are going to move sideways. That does not mean that you can't make money in this market. You can make money in this market by following 3 simple principles that I'm going to outline, and you need to imagine the future somewhere in 2025. What will the future look like? And this automatically will give you the answer as to what type of investments you should be making for the next 1 to 2 years. So there are 3 things that I will say. Number 1, this will become the age of monopolies. This is given, this is almost going to happen, and I'm 99.99% sure about it. Again, not an investment advice. I will not talk about what I mean by monopoly. You guys are smart enough to understand what is meant by monopolies. So companies like Amazon, Microsoft, Apple, Hindustan Unilever, these type of companies are much better placed in terms of handling unstable inflation. So they are going to win, and they are going to pick up the market share that will be left by small companies that are dying in this recession. So this is 100% going to happen. There can be short-term pain in terms of more drop in stock price for all these companies, but in the long term, these companies are going to win. Number 2, the age of artificial growth is going to stop at least for half a decade, and a lot of companies that are planning on launching their IPOs, they will have a very hard time, no doubt about that, especially the ones that are not growing in revenues, that are struggling to raise the next round of funding. Third and final investment related point is that please study and understand about what is meant by hard assets. I had done a separate video on that. Please go and watch it. Now the world is becoming where diversified investors will be rewarded. Traders will have a very, very tough time surviving in the market for the next couple of years. It is going to be a brutal bloodbath, but an excellent market for investors who can handle volatility, and handling volatility will come from conviction. If you're sure that a stock like Hindustan Unilever, ITC, or whichever stock you pick, if you're confident about it, if you feel that it is going to survive this phase, and if you continue to invest in this downturn, you are going to reap excessive rewards when the markets recover, and markets are going to recover someday. And bad firms and bad businesses that do not use wealth and money responsibly, they are going to go away, fade away, and that market share will be picked by good companies. So please identify good companies. Continue to invest in an SIP mode for the next 1-2 years, and you will benefit a lot. Please do not try to time the market, be asset diversified and invest sensibly. Thank you so much for watching, and I will see you soon.